everybody, Monday. Let's do the rundown. Stocks were higher, as I have been predicting. A lot to talk about. And there are things that I have been talking about, namely the acceleration in bank credit. I mean, we have been seeing, and it is really, really stunning now when you see the data over the last several weeks, and in particular this past week, the acceleration, the boom, I should call it, in bank credit. And that includes loans and leases. It includes securities that banks have been buying. So there has been an enormous upsurge in bank credit, loans and leases, deposits, etc. And of course, as MMT explains, loans create deposits. So this is all a very bullish thing. If we were in an economic environment where we were seeing economic stress or contraction, even a recession, everybody's talking about recession, right? There wouldn't be such demand for credit, and you would not see banks accumulating assets like this and creating loans and leases at the pace that it is happening. I mean, in some instances, we're talking about growth rates in these banking metrics at 4-year highs. I mean, it is really astonishing when you look at this graphically. It has been a very, very rapid acceleration over the past 6, 7 weeks. And really, in the last week, we saw some tremendous gains. Tremendous gains, you have to see that. So this again fits with my scenario that I've been talking about, which is A, we're not going to see a recession. When you have the combination of record levels of fiscal support and now bank credit expanding at this pace. I mean, these are two extremely powerful monetary phenomenon coming together at the same time. It's a perfect storm. It's the perfect monetary storm that is coming together at the same time. So it lays out the potential for a major turnaround in the financial markets, and that means powerful reversal back up in the stock market. And then when you think about the whole entire meme of, hey, the Fed's going to stop raising rates. There was even a rate cut priced into Fed fund futures last week for the January 2020 FOMC meeting. All of that stuff is going to be completely out the window, and we're actually starting to see some of that expectation dissipate. We actually saw today for the June 2019 FOMC meeting, that's the June meeting of this year, we saw a doubling in the probability of a rate hike. Last week they were talking about rate cuts. All right, so all of that expectation that has been built into the bond market, that is slowly, and maybe not even slowly, that is rapidly going to start to evaporate. You'll see yields going back up again, and there's still enough skepticism out there. If you look at any sort of sentiment surveys, AAII, for example, still shows a lot of pessimism, a lot of caution, a lot of skepticism towards this rally. So you have the wall of worry in place where it can climb up. The continued selling of stocks that happened in November and particularly in December, that was whacked out. That was crazy. That was people dumping really good stocks out of sheer panic and emotion. All right, it was totally unwarranted. Totally unwarranted. I got to talk about the dollar, where, as you know, I've been bearish on the dollar for a long time. Dollar index broke back down into the 95 handle. We haven't seen that since October. It nearly has reversed already 2 rate hikes, the last 2 rate hikes. The one in December, it's reversed already. The one in September, it is near reversing. And again, remember the whole story was, rate hike. We had 9 rate hikes, and the dollar index is below where it was when those rate hikes started. You saw last week that flash spike up in the yen. Went 500 pips, I talked about it here, went 500 pips up in a matter of minutes. Now, a lot of that has been given back, but I believe that is a symptom of what is going on in the currency markets, where the dollar's rally has become so tenuous that the natural go-to in a break was the yen. But it's now starting to broaden out to a lot of other currencies, and we're talking about general dollar weakness, and I think the conditions are in place finally for that to really get going in 2019. So a lot more to talk about. It's all in my report, MMT Trader. Remember, I am the only one out there who has an applied approach to MMT. I use MMT and the understandings of MMT to invest and trade in the markets. If you want to get a 30-day free trial of my report, go to pitbulleconomics.com and sign up for 30 days. Get all the back issues. And also I have zombie trading on there. All right, that is my daily Forex signal service. We front run the zombies, take their money, and get out before they die. You could also get a 30-day free trial by going to my website, pitbulleconomics.com, and signing up. See everybody tomorrow. Bye-bye.